Hello, guys. Good day, everyone. Hello, good day, everyone. Nice to meet you guys. Right, so if you look at the screen here, okay, this will be the topic that we are going to discuss today, which is the volume spread analysis. I think it is a quite useful tools for you to tell the upcoming trend. Okay, and I would say it is like a um assisting tools for you to double check your own analysis. Okay, I will share a little bit more later on. Maybe we will wait for a couple more minutes to see any more people joining us today. So at the same time, while we are waiting, if you have any question, well, maybe you can type it up, then we can discuss here together. I think this week is not as happening as last week, right? In terms of the trends, unless you're talking about the New Zealand dollars just now, which we had a very crazy trend. And if you just focus on gold and some of the major pairing, I would say it's a bit boring. And then when the pair when the forex pairing is not that volatile, sometimes it causes losses. So I guess today we will have a quick one because it is quite easy, and I will just share with you the concept, and then hopefully, in the future sessions, you know, like when you see this kind of things happening, then you know what it means to the assets that you are trading on. So, okay, and if we have time, okay, you can come up with some requests to say discuss some of the asset classes together. All right, at the end of the session. So yeah, well, without further ado, let's start. So like every time before we start, I have to read out the brief disclaimers for today's event. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instrument. Trading CFD and other leverage product carries a high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit. So it is important to fully understand the risk involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pew Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. Okay, so this is the brief disclaimer. So let's start. Yep, as you guys can see on the screen today, we're going to discuss this what we call volume spread analysis. So a little bit of a story for why I want to prepare this content and share with you guys is that recently, if you guys have paid attention in the crypto market, okay, you might, you might witness a huge trend, right? So it is like the most happening asset class as compared to some things like forex, some things like gold. Gold has been quite sideways, I would say since June. So and then I always wondering like when will the rally stop? Okay, this is has been my question since last week, and it does stop, if I could remember, whether or not is that last Friday. So it does stop and then it start retrace. And now another questions like pop up in my mind is that when will this technical retracement or this pullback end, or it will be a continuation of the bearish trend? Okay, as of now, okay, it's like currently trade in a in a rather bearish manner. Okay, will it continue or will it end it now and then resume to the previous dominating bullish trend if you look at it in a long term or in a bigger time frame? Right, so this is a question to me, and I'll try to find answer, and I come across this volume spread analysis, and I think it's quite useful, not to say like 100% to tell me whether or not like it definitely going up, going to end the rally, and going to have a reversals, but it is like an assisting tools for me to reaffirm the previous all this analysis that I made, and then I will just double check with this. And if it's, come in line with my initial view of this asset class, then, if it will be more confidence for me to place my trade. All right. So yeah, this is a bit of the story why I choose this topic to discuss or just to share with you guys today. Okay. So yeah, this is the content that I will cover. All right. Never mind. We'll just skip. Okay, so first of all, again, this is the disclaimer for a volume spread analysis that I want to put it, right, at the first slide that, before we really like dive deep into this trading tool. So this volume spread analysis is actually is a rather subjective methods, okay, because it relies on each individual on how you interpret it, the price, the volume, and also the spread pattern. The spread here, we are talking about the range of a single candlestick. It is not like the spread, the cost, okay, that incurred when you place your trade. Okay, so this is the spread here is means that how wide the price range goes in a in a time frame, in an interval. All right, and also like I said earlier, like way earlier, and when we started, it's not like a foolproof on may produce false or misleading signal, because it takes experience. Okay, when you adopt this long enough, when you just look at the chart itself, the raw price chart, I hope that at some point in the future you might just spot on and can tell, yep, I think the rally is going to end here, or I think it is still strong enough that we can witness another rally after this. Okay, I hope that this is the result that we all can get someday after we learn about this. Okay, of course, again, we still have to use it as a supporting tools. Okay, if you are expert enough, you have been trading for like 5-10 years or what, okay, and you think you are expert enough to just use a raw chart methods to analyze any trend or anything that you trade, or you has been using some of the trading tools like the famous one, RSI, MACD, moving averages, things like that, or Bollinger Bands. Okay, you still can use it, and then you can confirm with the behaviors that we're going to talk about today. Okay, now, so first of all, what is volume spread analysis? So this is something that a methodology is that you analyze the relationship between price movement, volume, and the spread. All right. So any of you guys come across the thing what we call the smart money concept? Okay, or another name, or there's the slightly similar idea is what we call the inner circle trading. Okay, ICT, SMC. Okay, maybe some of you guys here, stay long enough in the market, you might come across this term. Or maybe after these sessions, you can dive deeper and then do your own research on these two trading methods. And I personally think it is very useful. Okay, why? The logic behind this, including the volume spread analysis, is that us especially like we trade merely on the trading platforms. Okay, if you're not trading on Pure Prime, you're trading on elsewhere, it is still trading on the platform, and it actually does not really directly impact the price changes of anything that you trade. All right, unless you want to talk about liquidity provider. If you place an order big enough that you're going to change the liquidity providers, in terms that they have to do some of the hedgings, right? And then they will actually place some order, then ultimately it does change the price of the forex pairing that we trade, unless you're talking about that. But if you, let's say you open a lot, or 10 lot, 5 lots for gold, for example, it does not change the price of the gold, because your order will just place to the liquidity provider through PU Prime. Okay, so for example, like the forex, okay, they are trading through over the counter, okay, decentralized. Okay, and another example for let's say if you trade on BTC on PU Prime, it doesn't really change the price of BTC, because the demand, the supply, okay, the buy and sell that you made on PU Prime actually does not change the price of BTC itself. Okay, so why I talk about this is because the institutional player, the big players, the banks that okay, some of the biggest bank like JP Morgan's, like Goldman Sachs, okay, or Binance, okay, if you're talking about BTC, or some of the stock like the fund house, like I don't know, like Rich, I don't know, some of the biggest fund house in the world, like Fidelities, like BlackRock. When they place an order in the market, it will really drive the price changes of each asset class, but not small potato like us, right? So how can we win? Okay, how can we make sure that our win rate is better or higher? Okay, is to follow the institutional player footstep. Okay, we try to guess like what they do, and then we follow suit. Hopefully we can hop onto the same boat, and then we go to the same directions. This is how we can make profit. Okay, so similarly to SMC, smart money concept, and also ICT, inner circle trading. So the volume spread analysis not only do the same thing that the SMC and ICT does, but also we take into account of the trading volume. Okay, why is it so? It is because if you want to manipulate a price, okay, we're going to be sometimes easily fooled by the price action itself. Okay, if the institutional players, or what we call market makers, want to fool this, the retail players like us, okay, they can do so because they are so powerful. They have so much fun on hand. They can really manipulate and make us like the puppet. But anything they do, it will have some evidence in the markets, which will be reflected in the trading volume. So here the volume spread analysis believe that the trading volumes cannot fool us. Okay, no matter what the institutional players do in the markets, it will, as a result, have some of the trading volume left in the markets. Then we can try to trace these trading volumes, and alongside with the price movement and also the spread patterns, hopefully we can try to guess what the institutional players try to do. That is why I say early on when we started this webinar, I say it does take time. It has to take you, some time to gain your experience. So later in the markets, I don't know like how long you need to take to just spot on, and then when you see these kind of candlestick patterns alongside with this volume size, then what the market maker is trying to do. Okay, yeah. So why we use the VSA, volume spread analysis, is that it does help to reveal the hidden buying and selling pressure. Okay, so I know, for example, if you look at a doji candlestick, okay, hopefully everyone here know about what is doji candlestick. It is something like a cross, okay, with a very small body, but we have a long upper wick and lower wick. Okay, so sometimes when we look at it, we don't know like what does it mean to us. But if you see that the trading volume is very, very low, then you would think like, never mind, because it's just that the activities in the markets is very, very low, so that is why the market left very indecisive. But what if the trading volume is extremely high, it's much higher than the average trading volumes, then what does this tell us? And also we have to at the same time take into account like where does candlestick appear. Okay, it does matter. Okay, I will tell this a bit more in a later in the later sessions. Okay, so it does help us to identify the accumulations and also the distribution. So here we're talking about you have to have at least a minimal knowledge that you know how to draw a support and resistance level. Or if you already know about what is this week off trading method, okay, where it in this method it tells us what is accumulations and what is the upward push, and then later distributions, and then sell down. Okay, these circles, okay, you can learn about this through the week off, and then apply alongside with this volume spread analysis. Hopefully in a future basis, okay, you can benefit from it. Okay, and also before we go further, I also want to tell you guys is that this kind of trading tools, this kind of trading method is more suitable for people that love to how to say, advocate on the swing trade. Okay, if you are here, if you are like news trading lover, okay, you love to trade on NFP, you love to trade on CPI, and you just want to you want to expose yourself. Okay, you just want to open one positions for like 15 minutes, 30 minutes, 1 hour, then this is not really like 100% useful for you. Okay, so if you are like me, I really wish one day I can capture the entire trend, for example, BTC, from like 110. I would love to hold it until 123, and then maybe I can spot something different through VSA, and then I can spot this trend reversal signal, and I will try to sell it. I'll sell until today, when BTC now trade to like what 113K. Okay, so this is the ultimate goal that I try to achieve, and I will try to seek help from various trading tools, various analysis tools, and try to help me. Okay, so in a nutshell, all this concept that I said earlier is more suitable if you are at least a day trader or a swing trader. Okay, that is like suit you the most. Right. And yeah, the third point here, why we use the VSA, is that it enhances you to make your trading decisions. Okay, it has a clearer entry and exit signal. Okay, and again, this is just a supporting tool, assisting tool for you to double check your decisions. Okay, if it happens, maybe you already have one idea in mind that you want to exit at, for example, now gold, you are shorting the gold. Let's say you say, I want to exit TP at 3,300, for example. And then really at near to somewhere there, and it comes to have some sort of scenario of the VSA that's supporting you to have a TP there and a trend reversal signal there. And it will be fantastic, isn't it? And then you boost your confidence to make these trading decisions. Okay, and it works across most of the asset classes except for forex. Okay, why? It's because of this. So like I said earlier, forex trading volume is hard to trace because it is decentralized. It trade over the counter, and we know that the biggest trading hub for the forex happen to be in London, and then coming up with New York and Japan. So there is no one-stop stations that has the most acute trading volume for all this forex pairing. So it is kind of hard for us to use it, to apply it for the forex trading. But like I said earlier, why I come across this is because I really want to win in the crypto market, which is like so happening now in the market. If you compare to something like gold, like oil, and also some of the forex pairing, okay, it has been quite boring recently, isn't it? Okay, so forex trading, forex pairing, it is hard to trace the trading volume, and which is okay. Of course, you might ask me like, you do get the trading volume if you use TradingView, okay, or you use the MT4, MT5, but that is what we call the thick volume. And of course, some people claim it as it is like 90% true, 90% accurate, relates to the actual trading volume. But it is still, and also sometimes if your forex broker is small enough, then maybe they don't have the real the true trading volume for the forex pairing, then it might lead you to a wrong trading. So again, if you use it for like a particular stock counter like Nvidia, Tesla, or you use it for BTC, that it's easier for you to access to the actual trading volumes than it is like 100% for using the VSA. All right. So how to use before we go into like discuss with the scenario, like what we get and then what does it mean. Okay, here are some of the key concepts for the VSA. First is the spread. Okay, so again, the spread here we are talking about for the VSA is not the spread cost. Like remember, like when you start a position, it often start with a negative P&L. Okay, this is because we incurred with the spread charges, right? But again, the spread here is what we are referring to the range of a price bar. Okay, high to low. Okay, widespread meaning like high activity. Okay, for example, if you have like one single candlestick spread across for example to go 3333 to 3340, okay, $70 difference for per ounce, then it is considered as a wide spread. All right, and also the next concept is for volume. So this is like the key things that we discussed today is the trading volumes is also represents the trading activity. High volume, definitely, we're talking about a high trading activities with at this particular intervals and within this price range. Okay, narrows, then narrow is means that it is means that the negative the activities is very low at this particular price range, particular time frame. Then what does it mean? At what level? So I will go deeper in this later. And thirdly, it's also very important where the price close. Okay, so if you know about the candlestick patterns, right? It is like a no full body candlestick or it's like a dodgy candlestick. It does matters for us to interpret what the institutional player is trying to do. Okay, what does the market makers trying to do? Okay, and the fourth and then also the most important concept here is smart money. So smart money refers to the institutional traders that could manipulate the price movement, not people like us. If you place okay, if you start a position with 100 standard lot size, I don't think you can really push for a price movement. Okay, here we're talking about like billions of dollars for us to move the market, to move the price, not really like small potato like us. I'm not sure like any of you here really a billionaire, then yeah, it's another story. But even you are a millionaire, I don't think okay you will you can actually manipulate the price. Okay, like yeah, no chance for us. Okay, yeah, like any other tools, any other technical analysis tools, we most of the time we separate the signal between bullish and bearish, strength and weakness. So here are some of the example for the VSA signal. So uptrust bar. Okay, so what is this? Is that the bar is very huge, solid, big one, okay, full body, widespread, and at the same time, the trading volume with this candlestick is very high. It's higher than the average trading volume. Okay, and it's also have to be that the price close at near the high. So this is what we call a full body candlestick. Okay, so definitely when you see this kind of candlestick, it means that a continuation, isn't it? Even though it is like an uptrend, for example, okay, for example, if you look at BTC, okay, and then like previously have been like sideways near to 115K, and then suddenly spike up to 120. So and when BTC reached 120K, some of you guys here might think that, oh, maybe you will have a technical retracement. It might come over the way down. And some of you guys think just break through 120 days psychological levels definitely is very, very strong. I should hope on, I should like open more positions. Hopefully BTC can go even higher. Okay, so we have like a divergence and opinion here. So if BTC reach 120K with this uptrust bar, what does it mean to us? It means the continuation. It means that the bullish trend will continue because the spread is wide, the volume is high, and the candlestick closed at much higher levels. It means every institutional player agree with this price. So everyone rush in to buy and close higher. Okay, all the institutional player agreed that BTC should worth this much, and for sure the next candlestick, the next candlestick will continue to rise because everyone is rushing in because they don't want to left out, right? And then the next one is like no demand bar. Okay, narrow spread. Okay, in the example here, maybe we are referring to a doji candlestick. The trading volume is very, very low. Okay, and it's like moving up. Is what does it mean here? Okay, it could be if it at the peak, okay, at like near to your resistance levels, and it will appear this thing. It might be like an indecisive price levels, and it not like 100% guaranteed that it is a trend reversal. It could be, but not necessarily. Why? Because the trading volume is low. It means that the activity here is low. It's not involving the institutional trader. Okay, so again, only the market maker, only the institutional trader player can decide the directions of the asset. So when there is no involvement or minimum involvement of the institutional player, it means it is like nothing. Maybe it will also suggest a continuations when the price reach your resistance. Okay, it could be like that. And climatic action is that high volume with widespread after a trend. Okay, this here means that a exhaustion. It means that, oh, maybe that is a at the peak, and then it might suggest of a trend reversals. Then you have maybe can consider to take profits of your positions already. Okay, and then move on is the weakness. A downtrust bar is the direct opposite of what we discussed early. Widespread, very, very high volume, and near the low, the selling pressure. So when when this appeared, you know, if you are shorting gold, for example, okay, and recently if you have been trading with gold, you can tell it has been like trading in a downtrend, right? So when the downtrust bar happens near to, like, you know, the example that I give earlier at 3,300, okay, at the very critical support levels, and here come this downtrust bar, the widespread high volume close at the low. It means a selling pressure. It means that a continuation, okay, it like will continue to go down because all the institutional players still rushing in to sell more, sell more and more, sell more and more. Whatever price you give, I will just keep selling. It's been the continuations, and I think so. You would think that, oh, at 3,300 is not a place to witness a rebound, but a continuations of a bearish trend. Okay, so I will not go again like with the supply bar and also the stopping volumes. Okay, it will be like the vice versa examples that I shared with you guys early on. Okay, so I'll give you guys a test. So 4 common scenarios in volume spread analysis, then you can tell me whether or not it is a continuation or a reversal. So very easily, if you see this white range, it means that the candlestick is very huge, very long, and then followed by a high volumes. It means that this particular time frame involve a huge amount of institutional players and trade in a very high trading volumes. It means that this price range is solid. This price range you know, have all the similar opinions in the market. Everyone decided a one direction. Of course we want to follow, isn't it? It means the continuation. Okay, but wide range, low volumes, what does it mean? The trend might be huge, but the activities is low. It means that not everyone agreed with this trend, agreed with these directions. So you have to ask, where is where it disappear, whether or not it is already at the peak of a trend, okay, where it happens at the resistance levels that you draw, then it might signal a trend reversals for us. All right. And similarly, if it just happened at the support levels, huge bearish candlestick, but the trading volume is very low. It means that not everyone is supporting this view, and we might witness the next candlestick with a bullish one. Then it's a confirmation of a bullish trend reversals. Okay, this is just an example, right? Okay, third one, narrow range, high volume. Okay, so this is also is meaning like two group of people are actually fighting, and there is no a common or a mutual agreement towards one direction. Okay, meaning to say have two huge group, they are fighting, one is selling, one is buying, so end up that the range is very narrow. It's like a dodgy candlestick, but the trading volume is huge. Most of the time it could be a trend reversals. It is also it has to depends on where this candlestick appeared, whether or not it's appeared at the top, whether or not it's appeared at the bottom, or whether or not it appeared in the middle of nowhere. Of course, when it appeared in the middle of nowhere, then it is like kind of useless for us, okay, because both sides is fighting for a range, and then 50-50, and then if you happens to trade in the markets like for sideway, and then it kill both sides, whether or not you're holding a long position or a short position, you still die. Okay, you will still be making losses. Okay, so this is also sometimes I will refer this as a signal for me to stop trading. Okay, because both sides of the institutional traders, they are indecisive for the upcoming price actions, whether or not to push it higher or whether or not to hammer it down to lower. Okay, maybe for example to the recent gold trend, where it's really like very indecisive. The price range is like this, lies at between 3,300 to 3,400, this range. Okay, and if you compare to the previous trend, previous month, it is very sideways. So I guess I'm not sure. Like I already like give up on trading on gold because yeah, I really can't tell what is the upcoming trend. So I rather to focus more on some things that I is more predictable to me. Okay, and then I will apply alongside with this VSA. Okay, the last one, narrow range, low volume. Of course, this is then something that we can really forget about it because like the range is low, the volume is low, is kind of useless. Then we have to look for alternative. Okay, we have to look to others technical analysis tool for us to make some judgment. Okay, it means that not everyone is participating. The trading activities is low. It could be that if happens to have a multiple candlestick in this way, it means that now is only involving a small group of people that is not a obedience for the majority. That sometimes it could be also a trend reversal signal. Okay, if a few candlestick happens to be a narrow range plus a low trading volume. Okay, so it means that the institutional players, they are thinking of to go to the opposite directions, and then left a small group of people are still trying to push for one directions, then it could be a reversal. This is the logic behind this, and I've tried to figure it out. For me, the fourth scenario here sometime is 60%, 70% of a chance of a reversal rather than a continuation. Okay, so at least it will be alert and alert for me if I spotted this kind of behavior while I use the VSA. All right. So I would recommend you guys to also look into this, what we call the Wyckoff trading methods. And then here it will give you this simple yet is very useful, yet as the law of nature, the law of trading. So of course, if you know about the liquidation grab, you know about the liquidity zone, definitely, you're going to learn about the accumulations. So why a market maker try to do all this thing, and then you really kind of anticipate after the institutional players accumulates enough bullets, enough of an asset, and then they will try to push. Okay, so this is also along the way, like for us the retail to jump in because it's already appeared like one directions. Okay, we jump in and jump in, but the beauty of it, the art of trading is that we have to leave like at this range. Okay, we don't be greedy because we know after the distributions, here come the markdown. And here come like most of the retail traders die. Okay, why? Because the market makers already making money here, making our money. Okay, and then they will push and sell down. So here is some of the people that are being killed here. So the beauty of the art is that after using the VSA, we try to want to get the signal here. Okay, try to get like whether or not it is like when it goes up here and then it's like a dodgy candlestick or a very short body, but the trading volume is very huge. So it's what's doing is like a distributions, right? Because the institutional players try to sell all their assets, all their previous accumulated inventory here, sell to you. So that is why the price is not moving, yet the trading volume is high. So this is the place where we want to distribute also alongside with the institutional player. Okay, we don't want to sell or close our position here because we're gonna losing up. Similarly to here, like sometime when it like a previous downtrend and come to here, like suddenly it's not dropping, yet we see like a non-dodgy candlestick, but the trading volume is huge, and then maybe the last one, the last wave, the candlestick is very huge, full body with a strong trading volumes. Then this is might be the last chance for us to jump into a long positions, and then we try to trade along the way with the institutional trader. You might think this is like easy enough, but it is not that simple when you look at the actual markets. Okay, but sometimes when you trade long enough, you can kind of spot this cycle. So this is like for the 100 years, the institutional trying to trade like this. Okay, because without doing this, without doing the accumulations, they can't make money, they can't distribute, they can't sell now. Okay, so it is almost a must. But how good are you in spotting this kind of cycle? How good are you in spotting what they do beforehand and follow them? That is the art. That is like our lifelong lessons for us to pick up. Okay. Now, some common mistake to avoid. Okay, ignore the broader trend context. Okay, what does it mean here is that maybe you are like so good in doing technical analysis. Okay, so good. Your win rate is above like 60, 65, 70s. But if you ignore the broader trends here, what I mean is that the fundamental news. Okay, so you could be thinking like the gold is going down, okay, selling. Suddenly, like, tomorrow, President Putin come out to give a statement saying that he disagreed on what has discussed with President Trump last Friday, and he will just go all out full war with Ukraine. And guess what to the oil? Guess what to the gold? It could, topple off your technical analysis. All's going to be wrong, and then, excuse me, you can see the gold just skyrocketed because it's a war. Okay, everyone just rush into this safe haven asset, safe haven metal. Okay, so we have to understand the markets, trying to tell the story what happened now with in the markets. Okay, for example, if you trade with the dollars previously has been very weak, right? Because the market has been thinking the Fed's going to cut the rates soon, and then because of the non-farm payroll, President Trump condemns the Bureau of the Labor and Statistics, and then dismiss the chairperson, and then people sees that the job market in the US is weaker and weaker. This kind of story that leads the dollars to be trade weaker and weaker sessions by sessions. But recently, why that is like a slight rebound is because we have a very important event start from tomorrow, the Jackson Hole's Economic Symposium, and the traders in the market, the participants in the markets believe Jerome Powell is going to at least give some clues regarding the upcoming monetary policies. And then if you take into account of the latest PPI index and also the CPI index, it's kind of show of a chance of a rebound. And then, yeah, this kind of thing, this kind of big story, fundamental story in the markets, that is the main driver for an asset classes. It's not going to change if you're looking at the technical analysis, because technical analysis is just using the past record, the past trading records, the past price action records to try to predict the futures. But the priority has to be the fundamental. Okay, and the next one, over relying on the single bar without the confirmations. Of course, the VSA is looking at it bar by bar. But of course, you can take into account of the few bars, because we are a swing trader, isn't it? We're not going to just trade, by one bar by one bar, but we try to catch a trend. So maybe at the same time, you can take a couple of the candlestick when you do your analysis. We not really stick to one single candlestick to make the VSA. Okay, and not accounting for market specific behavior. Okay, this is very similar to what the example that I give you, and failing to use the proper risk management. This is the key, and I think I almost stress this at the end of almost all my webinar, because this is make something that make you win against like 80-70% of the traders out there, against all your friends, also peers. Okay, sometimes we does do risk management, and sometimes we tend to like tune it along the way, right? So this is also not a very good behavior, and I admit that I did this kind of thing sometime in the past, but I try to scold myself for doing this kind of behavior. Okay, so I stress this again, do your proper risk management. meaning to say set all your stop loss and TP before you click the start button, okay, before you click like, start the positions, okay. It is very, very important for you to place your TP and SL at every single trade and try not to tune it, because if you already make a very thorough analysis, TA or fundamental, and then when you already come up with your support and resistance line, and then when you already have your stop loss and resistance, try not to tune it and stick to it. If you got it wrong, the chance is always there when you save, when you protect your trading fund. Okay, but if you keep tuning it or you don't even bother to do it, trust me, 90% of the chance you're going to wipe out all your trading fund, which is not nice for any people here. All right. So last one, okay, this is not about the volume spread analysis, but just the economic calendar. And for the coming up 5 sessions, you can have a glimpse of it. Most of the economic indicator or economic events, they are focusing on pound sterling and also the US dollar, because they are the UK and also the US related economic indicators. Okay, so you can you know that the most, okay, the triple star indicators here is the PCE reading. Okay, the PCE reading here. And why it is so important, one thing is this is the favorite, okay, the Federal Reserve favorite inflation data. Okay, the inflation gauge for the Federal Reserve to make their monetary policy decisions. Okay, so it deals next week. And like I say, now that it's like a shift in the market sentiments regarding the speculations of the Fed's upcoming monetary policy. So this is exceptionally important if you are trading the major pairing, the US dollar related asset classes. Then this is like a triple star. The rest is kind of like PMI, then retail sales. Of course, if you are trading like day trading, if you are like a scalper, then of course it does very, very important for you. But if you're holding something long enough, then I would highlight the PCE as a triple star economic indicators for the upcoming week. Okay, and if you refers to the latest non-farm payroll and then alongside with the PPI and CPI, it's kind of can tell that the PCE maybe will come in a surprise, and then may lead and maybe will be the de facto for the Feds to hold the rate unchanged. Okay, now still like about 70 to 80% of the chance that we could witness the Feds to have a rate cut in September, but only after we can only after guess it after the PCE reveal. Okay, or when it disclosed, then maybe we will have another, maybe we'll have another webinar and we will talk about this, and then we can kind of tell how strong the dollars will be, okay, in the upcoming sessions. Okay, so here come to the last slide, and then thank you, and hopefully you guys can get something at the end. So today, okay, the VSA. So again, this is not like 100% very useful analysis tools, but it's just a confirmations for you when you already make your thorough technical analysis, and then when you spotted something like this, hopefully at the end of the day, it is very easy for you to make a decisions when some of this very familiar scenario happens when you just look at the chart, right? So yeah, I'll open up for the Q&A. So if you have any questions, whether or not it's regarding the VSA or whether or not it's regarding the markets, you guys can type it up, then we can discuss here all together. Thank you all the support. Any question? Thank you, Jeffrey. Thank you, Faisal. So if you guys have no questions, then yep, Thank you, Dol. Thanks for your support. Hopefully, you have a very enjoyable experience trading with PuPrem. And yeah, hope to see you guys in the next sessions. Right. Then thank you. Bye bye.